Good morning, everyone. Hope you can hear okay. So just to let you know, we leaned short in the chart patterns mastery room. So far, so good. And just so you know, I want to go over, do you want to be the house or do you want to be the public? So I want to go over probabilities in here because in the long run, that's how you make money, is going with the probabilities off of. What were people keying off of? Well, I think the banks were going straight down. So to me, and the NASDAQ was going down. So the probability was the SPX was going to go down, not up. So you got to have those probabilities in there. So I thought I'd go over a number of probabilities and sort of trader fallacies. So number one, what does the house use? What do most of the house use? Well, they use some kind of oscillator. They use the 200 moving average, the 50 moving average, the 20. And intraday, I use the ATR trailing stop. So when I'm talking about the house, what am I talking about? I'm talking about this. If you're overbought in a downtrend and you're at resistance, you're crazy to be long overnight. So, hey, maybe it works, but it's the house. Is the house going to be long when you're overbought at resistance, or is the house going to look for a short entry? That's your question. So when you go into this, and this is why we were short, just keep in mind one thing. This is what most of the hedge funds use: a 20, a 200, and a 49 or a 50. Intraday, they use a 20 and an ATR trailing stop. If you try to use a 20 blindly as support, you're going to lose your butt. That's one thing. But I want to go over this so you know what we're talking about with oscillators. An oscillator doesn't mean to blindly short the market, or oversold doesn't mean to blindly to buy. What it means is the probability is you're going to fail at resistance if you're already overbought. Like I said, it's the house. You want to be the house. If you want to go and buy when it's overbought at resistance, well, that's up to you. But the house plays it the other way. You know, I was on the floor a long time. I consider myself, I'm not saying I'm the house because I'm not like a hedge fund, but you can combine charts to sort of get into the head of what the hedge funds are doing or the algorithms. So I'm telling you right now, algorithms are extremely simplistic. I know you think it's like 50 different indicators. A lot of times it's one, and believe it or not. So they might be an ATR trailing stop and nothing else. That's it. You're trying to anticipate what the algorithms are doing. Yesterday, why did we short? I'll show you three reasons. I like that 3 reasons to do a trade. If you came in long right here, well, you get lucky if you get out, but you made maybe 5 points. So you were risking the resistance, which was up here, right here. You're risking the trend line break. So you're trying to make 20 points and you're risking 100 to 200. So that's why we played the short side. When you're overbought at resistance, go to a shorter term time frame to time your entry. That's what we did. This was posted on StockTwits, Central Room, and Chart Patterns Mastery before it happened. Yeah, not a hindsight trade. You want to do it before it happens. And that's what we did. Then on the way down, where's the support? Now that's another trader's fallacy. A lot of traders think, well, you got to fill a gap. No, what it means is on the way down, the path of least support is the gap. And that's what it filled. Meta did the same thing. Russell did the same thing. The NASDAQ did the same thing. All you're doing is trying to take the path of least support. So if you're watching this, the first thing you do, which we did, is we shorted based on the 15-minute moving average. That's number one. Number two, you can go and take a 1-minute chart. Does everybody see the similarity between the 15-minute chart yesterday and the 1-minute chart today. Sure seems similar to me. Broke the ATR trailing stop, defined trendline break, and the 15-minute was ridiculously overbought. So that's why I was showing short ideas, but then I had to get off because I'm in here. So I just flattened in the chart patterns mastery on the trade that was like an hour trade, even though it worked great. But the key is history repeats itself. The 15-minute chart back here and the 1-minute chart right here. They work beautifully. Now, are there ways to improve your odds of success? Well, number one, use a MACD or an oscillator. You're overbought, and then you look for your trigger. That's it. You're overbought. You're looking for a trigger. See this line? I posted this before it happened. Look at these lines. These three. They were overbought and had a defined trend line. Be the house. Play the way the house is playing. When you're overbought, you're looking for the short trigger. When you're oversold in an uptrend, sure, you could look for a long trigger. But I'm telling you right now, if intraday you're trying to use a 9 or a 20, that's bunk. It doesn't work. If you want to use something like that to stop yourself out. So if you're short in here and you want to stop yourself, by all means. But don't blindly use a moving average as support. So on the way down, don't use it as support. It doesn't work. So it just doesn't. So price support, that's what matters on the way down. Meta, where was price support? 600. And it went right to 600. The Russell, where was price support? The gap. And it stopped there. So try to be the house. Try to be the house. Like I said, if you want to go and take this and you want to take the trend line break, it worked. So what else are you noticing? Well, you also want to be a house by doing this. You want to take on the left, the ES, which I showed in the other room. You want to take the ES over here. And when you're watching a 15-minute chart, or a 2 for that matter, you know the 15 is overbought. So chart patterns mastery, if you're in this room, what was I saying with the key? So the key was that the banks were refusing to rally. And the banks, to me, are a big tell. Always know the tells, but I'm trying to show them to you before they happen. So right here, you had the S&P going to a new high. And then on the right, you had the JP Morgan going to a new low. That's not healthy. So when this had a trend line on a 2-minute or a 1-minute, and the 15 was overbought, and the banks were trying to test their low and refusing to rally, that was a great tell. So Jonathan, thanks. Thanks for giving me props on that. Just like I was giving you props on the SPX and the Netflix earlier. Those were great calls on your part. So don't think I have some ego where I won't give you props. Those were great. So that's in there. So, and the other, like I said, look for defined trend lines. There's a defined trend line. Let me show you a bear flag over here. And on the right, I'm happy to show you if the overall market looks like a bear flag. It doesn't. So I'll show you. So here's the ES over here. And I'm going to put over here, I'm going to unlink it. There's a daily chart. This has no semblance of a bear flag. Do I think it's overbought in a downtrend? Yeah, no doubt. But this is what a bear flag looks like. A bear flag looks... There's your bear flags. I'll take off everything here. Take off everything. Like I said, take off the moving averages. Chart patterns matter more. So, what do you see? That's a bear flag. That's a bear flag or a Brecher ledge. There's a Brecher ledge. What's a Brecher ledge? It's a bear flag with a horizontal trend line. That's all. So, bear flag, Brecher ledge. How about on a daily S&P? That doesn't look like a bear flag, even though overall I'm bearish. But it doesn't look like a bear flag. So it just doesn't. But these are your bear flags. They were there yesterday. We shorted all the way down. All the way down. So those are your bear flags. Now you might be like, well, wasn't this a bear flag? No. Didn't really look like one. But a lot of bear flags, what are you noticing? You get that snapback and that becomes resistance. Now, I have first editions of stock and let me see what it's called. Technical Analysis of Stock Trends from 1948. Believe it or not, this is in there. Nothing's changed. Prior support becomes resistance. Look at this, suckers. Look at all these. It's amazing. Now, the only difference between now and let's say 1948 is a lot of times you get that panic that overshoots it. That's all I see. That's why you combine it with an oscillator. So if it overshoots, but it's overbought, you probably can re-short. That's what we saw here. So you saw this not be a bear flag, but on a 5-minute, it got overbought. Look at these. They showed up on 5-minute. Then you got overbought at resistance. Then you look for your short-term trigger. So chart patterns mastery, how did that ES work? I think that worked pretty well for you. Overbought at resistance and daily doesn't look like a bear flag. And like I said, 5-minute work for a bear flag. It depends on your time frame of how you want to do a trade. So if you want to do a 15-minute, do you see a bear flag here? No. If you want to do a swing, let's say for the end of the day, nice and wide, yeah, you could use a 15-minute to find it. Maybe you won't see it. Intraday, I'm finding it's 1 or 2 or 5-minute charts. So, or trend line breaks. Hourly, if you want to do a swing trade, let's say for next week, you want to see a trend line break, at least. You would love to see a bear flag. You don't see that many on hourly charts because this is 24 hour. So you'll have to put like the SPX. So does the SPX have some kind of bear flag? Well, this brings me to a little nuance. The nuance is a bear flag against support is not to be trusted. Look at the difference between the bear flags. I'll show you. On the left, you see the hourly with lack of support till the gap. So that means on the right, the 1-minute ESs, and let's put it so it's unlinked. I'll just show you. So on the left is the S&P. The S&P had no support. We could take the SPX, non-24 hour. Had no support on an hourly chart till the arrow. So when it went down yesterday, the bear flags on the right were more likely to work. Like I said, you want to be the house. I just can't stress that enough. You want to be the house. These bear flags were more likely to work because in the bigger picture, there was no support on the way down. As you see, a bear flag in here is less likely to work because you're at the gap. Intraday, like I posted for Chart Patterns Mastery, darn right you had something. And then where's the support? Well, the support wasn't here, that's for sure. The support's in here. That's why it stopped. A lot of times you get bear or bull flags that support or resistance because they need to regroup. They get too oversold. You need to regroup so it has enough ammunition to plow through it. That's what I'm seeing. So I hope that helps for you. And in there, do I think it's daily bear flag? No, but I will show you that we're overbought in a downtrend. So, and there's another thing. So, and a lot of you know this from the art of short selling class I've done. Very hard to find the link for it, so you might have to call support. I'm really into dojis. So, a doji is an indecision candle. What do you notice on every single one of these dojis? Almost every. The follow-through candle. So the beauty of it is if you bought on that follow-through candle because you're like, yeah, you trust the follow-through. If you bought, you're stopped at the bottom of the doji. So you lose little, you make a lot when you're right. Doji, follow through to the downside. So, and it worked. The problem is now you're at support. So, in answer your question, it's not really a bear flag. Not really. So, but you're in a downtrend. So, in a downtrend, I'm definitely going to be looking for the bearish patterns to show up. So, when I see the doji and the follow through to the downside, I'm going to be looking for bearish triggers. If you buy right here and you come in long yesterday when you're overbought at a big trend line, then you're the public. You're not the house. You're trying to make 10 points and you're risking 100. That's not the way to play in the long run. You might get lucky. But what did JC do yesterday? We were talking about like my percentage of success. So 3 reasons usually is pretty good. Number 2, if JC and I are on the same side of the market, that's usually pretty good. So what was he doing? He was shorting yesterday. So were we. So the problem was I get psyched out sometimes of right here of shorting calls. He shorted call spreads, did great. We bought put spreads, we did great. Why did I buy put spreads instead of shorting calls? Because I love shorting premium. Because you always wonder about some back away from tariffs and it goes up to here. Tight stops help. So now, if you want to do that and you don't want to sell a call spread because you're worried about the SPX gapping up or something intraday, then just play the SPY. 1 point wide spreads. You can have tight stops. So even if there's like an unwind of tariffs and it does that, you'll be out here because it's a 1 point wide stop. They don't widen the markets. The SPX options, they might widen the markets on you. So ask Penn about that in our Chart Patterns Mastery. She loves playing the SPY because you can have tight stops. So there's another thing that I found out. So let me show you something really interesting. SPY trades at night. So there's 3 types of SPY trades. You can trade till 4 o'clock, SPY, and that's just normal. So just normal day order. If you want to trade between 4 and 8, it's EXT. So you can short, you can buy. But this is a little bit of a problem. Between 4 and 8 p.m., you can't put in a stop order. You can short stock, but you can't put in a stop order. Now, that's where it gets tricky because between 8 p.m. and 7 a.m. Eastern, you can trade EXTO, but you can't short it. They don't let you short it. But if you are short, let's say you short at 757. Believe it or not, you're allowed to put in stop orders. It doesn't show it in here. You'd have to do it after 8 o'clock. But believe it or not, you can put in stop orders on EXTO. Now, why wouldn't you put in a stop? Well, you can on, let's say, a Costco that has a 10-point wide spread after hours. SPY has a 5 cent wide spread. So you can do a stop. So from 4 to 8 p.m. Eastern, you can short the SPY, but you can't put in a stop. So you got to watch it the whole time. It's a pain in the butt. That's why a lot of people play futures instead. From 8 p.m. to 7 a.m. Eastern, EXTO, if Schwab allows you, they're going to let everybody later, but right now we're in a pilot program. So I'm in it. You can put in stops. So I just want you to know there's 3 types of orders: day, extended, and EXTO. So, and then they're 24-hour stock trading. What's the 24 hours? Well, I tried to build a big list for you. Not every stock is in it. So you got the Davidas, the Lennars, the builder's first source. The key in here is a lot of times if there's some bizarre news, it might knock something down that shouldn't be down that much. I'll give you, for instance, CGNRC. It's around 133 and big support at 130. But you get some bad news overnight, sometimes you'll be able to buy like 20 shares at 125. I've just seen it before. I've done it. So you can go actually to after hours and you'll see some of these 24-hour ones have some funky spreads. I mean, funky trades. So I'll show you. So just take equities, take extended. I'm not saying this one did it last night, but it did. Not a lot. Last night with the tariffs, it didn't do anything. There's too much support. But there's some stocks with that 24-hour trading have some wild moves overnight. You might only be able to get 20 shares, but you make like 10 points in like a PAYX or something. It's a lot of money. So I'm just telling you, here's a good list. Now, I'm sure there are more of them. Lots of times what I do is I'll go over here and I'll go to like NASDAQ 100. And I'll add the most high priced. And I'll drag and drop them so I have all these 24. See all the 24? Almost every NASDAQ 100's in it. And most of the NASDAQ 100, I've already built a list. How about the S&P? Not every one. But yeah, you could put those in there too. Most of them are 24-hour. They keep adding more and more of them. The problem is some of them are pretty thin and some of them aren't. So far, so good. About you can maybe get some panic in here. You'll see it at night. Maybe First Solar has a bid 118, offer 135, and somebody panics and sells it at 118. Don't put in 100 shares because then they'll show your bid. But you put in 20 shares, sometimes you pick them off. Take advantage of the public. You're being the house. So now, what about the broad market? In answer to your question about a bear flag, I don't see it in the broad market. On an hourly chart, do you see a bear flag? No. In fact, you see a nice reversal from the gap. So in here, we're talking about shorting resistance. I'm not buying support because we're in a long-term downtrend. So, and overbought still. And in answer to your question, can you make that in some way a bear flag? It's a great question. So in there, pink, Mr. NG, I'll show you. Is that a bear flag? Maybe. I see what you're talking about. But with that, when you're overbought at resistance, do you really want to buy in that? I know you're not looking at doing that. You're looking at shorting it. So a lot of times what I'll do is I'll look at different time frames. How about a 3-day? Is that a bear flag? It might be. You're right. So that's why we have on this. So we have a couple of longs on, not a lot. But with that pattern that you're talking about, it doesn't hurt to have long-term spreads under the market. So, I see your point. I wish it was a little tighter. Also, when I see a bear flag, I don't like a candle I'd like it a tighter candle. So let's look. But you see at least the doji and the follow through. So I hope you're seeing that. So let's go and show you this. Are there any defined bear flags? So the way I look at it, a bear flag, you don't want to have support. This isn't bad. I see exactly what you're talking about. The initiation has to be the follow through, which you got the 15-minute and the hourly break. And it worked. So totally understand of what you're talking about. The problem is, and I've seen this a million times, the structure is sort of a bear flag, but they overshoot. That's why these trend lines are so important. Like I said, don't worry about the 50% retracement. except this. So I posted this on StockTwits. If you didn't know, I have like over 57,000 followers. I post a lot there. You might ask why. Because I can't post on YouTube Live. I can't post in the Essentials, the Central, the Chart Patterns Mastery, and the chat. It erases at night. So at least you sort of have a running total in StockTwits of the kind of ideas I'm showing. I'm not showing trades in there. That's for our subscribers. There you go. The charts say it all. Look at that. There you go. Right here. Short trigger called out live. Yeah. So I showed that after the fact. But I want to show you a couple of other things. I don't usually tell people it's a dumb trade or don't do it. That's not for me to do. I don't want to shame anybody. But I also don't want people to lose money. So somebody came in and said they're buying calls and bonds. I'm like, you're crazy. I don't usually say that. Usually if I'm that adamant, I'm right. Overbought on a weekly in a downtrend. Overbought at the 200. Why on earth would you buy calls? The professionals are selling calls. And as you see what happened, it went down 5 points. So, and we were short here on the break. When you see resistance, that doesn't mean to blindly short. It then means look for the short trigger, just like we talked about with the ES today and yesterday. But go to StockTwits. I mean, you don't have to. I try to stick my neck out in there. I hardly ever promote. I just want you to know that. I hardly ever promote. I post content. That's the key. Posting content. So that's how you get a good reputation, is posting content. Good content. Relevant content before it happens. So yeah, you might say, but you just said before it happens, and then you showed a hindsight in the S&P. Well, I agree with you. But a lot of these were beforehand. This one, how many I've seen on Twitter that they've talked about there's big buy imbalances this week at the end of the month because the S&P is so far down and the bonds are so far up. Well, I showed you that. Don't trust that. This was 2 days ago, really 4 days ago, because the S&P was close to where it was and the bonds were close to where they were. So a lot of times 50-50 funds have to buy stock and sell bonds because it's so far out of whack. Well, it's not so far out of whack now. So just that's why I post this stuff. That's why I post it. So wanted to let you know that. So I try to show you relevant ideas. And so far, I think they've worked. And I hope I've helped with that. And I hope I helped. And you see what I see. So we're talking about the ES had that trend line. And there was another thing, a kicker. What were people keying off of today? They were keying off GM with the tariff news. They were keying off the banks because the banks were getting overbought in a downtrend. So what happened? And the Russell. So, and GRL, I hope that helped in there. So, yeah, you saw the keys. So, GM started faltering. The bank started faltering, and you had a trend line. That was a beautiful thing to show you that it was a short idea. So, and it worked. So far, so good. Now, another thing, in answer to your question about is it a bear flag with everything? Well, a lot of times what I'll do is I'll look at multiple chart services And I'll look at multiple indexes. So let's revisit it. S&P. Yeah, it might be. Well, let's put it this way. If you see that, are you going to do a swing long? I don't even have the moving averages up here. Does everybody see connecting the trend lines, the break? And then if you take the ES, you could connect the trend lines on a 15-minute. You can connect the trend lines on a 1 minute. So they do work on different time frames. But going back to it and answer your question, go back to the S&P again. When I see this, I don't want to buy. I'm trying to stay in swing shorts. That's number one. Number two, how about other indexes? NDX. That's not as cut and dry a bear flag. Now, I'm telling you right now, though, and you have a great question. Is it a bear flag? The longer it sits in this area, the more it's going to look like a bear flag. So now let's overlay a couple of things. 50 moving average. Yeah, the longer it stays like this, the more likely this 50 is going to curl down and also be resistance. But watch that trend line. And like I said, I'm using a 50. Now, a lot we're talking about the 200 acting as support, which I told you was bunk. On the way down, sure, it can act like resistance, but why care about that? Care about when it's near resistance, finding the trigger on the downside. Near resistance, the trigger. So you're right to look at that as a possible bear flag. So going back to it, NDX, maybe. SPX, maybe. How about the Russell? That looks a lot more like a bear flag. So you know what I think, that if the Russell was what pulled every other index down, if this does break, then these are more likely to have another leg down. So all about probability. Like I said, you want to be the house. You're not swinging for the fences, going against bad risk reward. So that's what I'm doing at least. So we're trying to show you good risk reward, good probability. And that means that right here, if you see a doji and it's overbought and you're near resistance, what are you going to make? You're going to make like 20 points if you're right, and you're going to lose 100 if you're wrong. Yesterday, if you're in the essentials room, and I was in Central yesterday, where did I tell you the market was going? 57.20. It overshot, but the path of least support. Now, where do you go? Well, like I said, now you got that little reversal candle at support at that gap. I'm not shorting in the hole, which means shorting when you're temporarily oversold. Finally oversold. Longer term, yeah, I think you go in lower. Longer term. So, in answer to your question about if that's a bear flag, so thanks for asking me about that. It's probably going to take more time to develop. It is overbought. It does have a doji. And like I've harped in here, the chart patterns master in the central room, I like seeing a candle that's higher than two previous to buy. It works. Or, and here. Or a candle too lower to short, like it did all the way down. In fact, all the way down. I know you know a lot of sites that were just blindly buying on the way down. Never in here was there a candle higher than two previous till here. And you had a nice move up. So look for those candles, the follow through on the downside and the upside. That's all I'm telling you. At the moment, now you're at support. I don't short at support. I short on the air hole. So hope that helps. So what else am I doing in here? Is there anything I blindly want to buy? Well, I'll show you something that's actually interesting. we talk about the hurricane play all the time. So what's the hurricane play? The hurricane play is GNRC is the pure play. You could put Home Depot. Obviously, you had the horrible stuff in Asheville and all my friends in there. It was not pleasant whatsoever. Did Home Depot go up on Hurricane Helene? Or did Generac? Well, I'll show you. So, because you're right that, hey, there are going to be some winners through everything. So go and put Generac on the right last year. And put Home Depot on the left. So they both went up, no doubt. But Home Depot went up in September when really Generac started going up here in August. So Home Depot was still going down. The pure play is always Generac. So if you go back, you'll see that Generac for years goes up after May earnings. After May earnings. Maybe not perfect, but it trends up. After May earnings, trended up. After May earnings, yeah, you got a little bit of a twerk right here. Right there. That's 50%. So what happened the end of the year? It crapped out. What happened this year, the end of the year? It crapped out. So that might be a long idea on a panic. Now, you might say, I thought you were going to wait till June earnings. Yeah, you probably want to wait till June earnings. So you might want to, what happened in this one? In February, it went down, but it went up prior to June earnings. So you could try to play something in there, but does it have a bear flag? Yeah, I'm not sure. So we're looking at longer term spreads because heck, that might go to here first. So we're looking. We haven't done anything. So that's a long idea. I got another long idea. Look what happened to the ES. I warned you. You sold off to that gap support. Do not short into that. That's all I'm telling you. So it's all probability. That's it. So I use a 3-10-16. That's it. That's it because it's worked for 45 years. Shorter term, yeah, you just use a shorter time frame. But all it's doing is you're trying to find if something's overbought in a downtrend, overbought in an uptrend, or vice versa. That's all you're doing. So it got overbought. And you look for the reversal. Oversold, well, you're in a longer term downtrend, but at least it stopped at support. So it all has to do with how to lean. So when it's overbought in a downtrend, I'm going to look to play it on the downside, looking for a reversal pattern. When it's oversold, if you want to be a just ultra short-term trader, you don't buy here. Yep, you buy when the candle is higher than 2 previous or the inverse head and shoulders. Right here. That's earlier. How about now? Can you go to an ultra short term? That's a little rough, but at least you had a little trend line you could draw right here. Not a big move. Still in a long-term downtrend, but at least you had some reason. If I was your hedge fund manager breathing down your neck and you're buying a 50 lot of ES right here, well, I'd say, yeah, I see exactly why. If you bought a 50 lot right here when it's a downtrend, it hasn't broken, I'd say you're nuts. So I use the same MACD I've used for 45 years because it seems to work. If you don't want to use that, we were showing it earlier. RSI, stochastic, they all do the same thing. This one is just the one I'm confident in. So that's why. In fact, here you go. I actually did an image for the inquiry minds earlier. There. That's the MACD we use. So like I said, longer term, that's a big deal. Shorter term, you got to respect this gap area. So I'm not shorting in the hole. That's all I mean. Just can't short in the hole. And in the hole to me means to short when you've already tested the low pretty well. So that's how I'm doing it. But I want to show you another sort of creative idea. Creative doesn't mean it's going to work. So let me show you what we're talking about. So Trump came out and said he might tax some of these drug firms that are domiciled in or have a lot of business in Ireland. So I'll show you what we're talking about. This is just a creative idea. I'm not sure I'm going to do it yet, but I'll show you what we're talking about if you want some long ideas. So, and you can use SMA, EMA. Like I said, it's about being overbought in an uptrend, overbought in a downtrend. You can use either. I experiment with them all the time, but you'll see it's checked in there of simple. So it's in that image that they're simple, but you can use either one. All right. Trump weighs tariffs on pharma. See that? Are there any that aren't in, that are only in the US? There sure is. Vertex and Gilead. That's that. So if you're looking for longs, there's two for you. So that's what I'm looking at. Does the market need to retest? It doesn't really. If it retests, it could be a bear flag and break down. So it doesn't need to retest or anything. I know there's so many that talk about that. All I know is that if it breaks this, it could go to 5,200. So I don't look at a test unless you see a reversal candle testing it. So right here, but it failed, but it then had a reversal candle. So do I think it's going to test it? Well, I don't know. Theoretically, I think it's going to break and go down to here. So I know it wasn't popular when I did the month. I'm not doing it tonight, but the January one that I did for yearly subscribers, I said I expected a 10% correction. So I had 100% disagree with me. 100%. So we had a 10% correction since I was on here. That's when I was on. So it said 10% correction. So it worked. What do I think now? I think this better hold, or you get a 20% correction. You get, bear market, whatever you want to call it. So, and let me show you the reasons why. I'm not saying right now. You might have the tariffs listed. Right now, how are the professionals playing it? They're playing it by selling the resistance areas after a short-term trigger. But I'll show you some of the warning longer term. So this is the warning longer term. I'm not always bearish. We made money on the long side too. But I'm watching this. Here's the S&P. Don't even have the MACD up. And here's a daily chart. And I'm going to put a weekly. And what you're going to see on the weekly is you're nowhere near the 200 moving average. On the other hand, the transports are under the 200. That's a massive disparity. Massive disparity. The Russell at the 200. So right now, the ES is 800 points, 900 points above the 200. What does that mean to me? Go out, do a historical perspective. On a sell-off, how often does the S&P on a weekly chart go to the 200? A lot. It ultimately seems to go to the 200 or approach it. Approach it. It's more likely to approach it if other indexes are at it. So 2020, well, we know about COVID and all that, but see that right there? The ES was still way up here, and then it went to it. Right now, transport's under it. S&P in the stratosphere. So to me, the probability if the transports don't rally and the Russell doesn't rally, the probability is the ES is going to go to the 200 eventually, but it's over the 200. And it's over 200 periods prior, which means to me this is still going up, which means it might only go to here. These were all upward sloping. It caught up with the 200. So ultimately, I think it's going to 5,200, which would also be this price support. Prior tops. Ultimately, that's where I think it's going. Not now. Not now. I'm saying ultimately. So, and this is going to be the other thing to watch. I know this probably isn't popular. So, remember I just showed you the 15-minute chart and I showed you the break and I showed you the 1-minute chart and showed you the break. Go and look at a weekly chart. Yeah, that'll scare you. Well, it's not scary. It's just to respect the stock market. Just have this in the back of your mind. So is there something that would keep you from shorting? Yeah, it's oversold. So go and look at the bond market again. The bond market's been in a big bear market, but you had to be patient and wait for the overbought MACD on a weekly. Go back to the ES now or the S&P, the actual cash. It's oversold. Other times that it's been this oversold, does it go to the 200? No. It first bounces. Your ideal, if you're bearish, is for this to go to here for the next month or two. Have this get back to the 0 line. And then break the trend line. And that's what I'll be looking for. So right here, like I said, I'm not wildly bearish or bullish until longer term. Bearish, I'm just looking for my ins during the day. Like I said, when this was just down 9, I was not getting bearish. You just can't. You've had that nice reversal candle. Those reversal candles do matter. Reversal at support. I am not shorting when you had a beautiful reversal of this morning. I'm not buying, but I'm just telling you, if I buy, I got to find stocks like a Gilead or a Vertex. And that's all. What else is going on? What did I tell you was my tells back here? My tells were the banks and GM. Well, guess what? They started turning the corner. So now you don't have any excuse to go down. So just want to show you that. So that's where I am. So that's what I'm looking at. And I don't know about markets retesting. See, the problem, Don, is if the markets did this, where they retested, like you're talking about. So you had like a sell-off, you didn't successfully, but it went to support. So you had this multiple layers. Like I said, forget about the moving averages. They'll mess you around. Prior price support. So this, where's the prior price support? Is this really support? I mean, you know that's some support, and it's a great question. Does that test the support? But where's the real support? To me, the real support is prior tops and prior bottoms. So that's zone. So that's what I'm looking for. You see the prior bottoms, you see the reversal candle. So I call that a zone. So that's the way I look at it, Don. And Don, right now, just Pavlov's dog. What stock am I going to look up now that you asked me a question? Yeah, I know I rub it in because we liked it at $1. I'm still watching Wrap. So that's one of those global instability stocks. So, I mean, it's holding up. But it's funny, every time you mention, you ask about something else, I have to show that to you. So we try to have a little levity on our site. I mean, it's a lot funnier when you're making money. I'm a lot funnier. But Don, just so you know, they're coming out with earnings. So, or lack of them. So I'm not touching that right now. Just wanted to bring that up though. They make straight jackets where they shoot it at you, believe it or not. Yeah, I like to do a lot. I don't just do charts. I try to do fundamental research as well. And the problem with RAP and some other stocks like it is they were late in filing their report by 6 months. Once they said they're filing it, it still hasn't done much. So I want to see what happens. That's number one. Number two, there were a lot of other stocks that I warned you about not filing reports, and then they got nailed. How's this look on a daily? Not much. Doesn't show you a thing. On the other hand, maybe it is a bull flag. So here's a creative idea. I'm not doing it, but just to show you. April. So let's say you're right and it's a bull flag. So where's the objective? Let's say 250. Where are the two calls? 35 cents. Too expensive. If you're dead right, you're not going to make a dime. So not going to do it. Now, if they were 10 cents, yeah, I'd probably buy them. Good risk reward. Now, terrible risk reward because the premium is so high that it's only compensating for that expected move. It's a terrible risk reward. So I'm not doing it. Now, if the earnings right here on March 31st, if they were, let's say, April 5th, so then the premium gets sucked out of it. And these are like 12 cents. Yeah, it's a good risk reward, but not here. So I'm not doing it. And by the way, I talk about companion stocks a lot. So if you were in the other rooms yesterday, you saw that I bought calls in Star Bulk Shipping. And in the Chart Patterns Mastery, you saw that I bought it at $15.91. Why would I buy this when you're saying, oh, you're bearish on a lot of things? Because there's always going to be some winners. Number one, this has acted great when the stock market had its correction. Number two, it's more a domestic shipping company, which is good. Number three, so the rest of the group is acting pretty well. Well, Zimmer is. So up 10 cents. Now you might ask, but it gapped down. Yeah, I didn't realize it had a huge dividend. But that has done this today, straight up. So that's why I stayed in Star Bulk. Oversold in an uptrend. So that's why I'm still in it, Chart Patterns Master. I don't know about buying it here, but I just want to let you know. In those calls, you got a mulligan. Yeah, they traded $1.10. Well, they were at $1.10. So that's where I posted yesterday. So you know what we were doing. So Star Bulk, not as much of a dividend as the Zimmer. 9 cents. Now, I don't know why it was 70, 70, and 60. I have no idea how they do those distributions. Theoretically, though, when's the next dividend? Well, they already had one. Probably you buy it and sell calls because you get the dividend, and it usually reclaims the dividend. Usually, it didn't here. It did here. Yeah, it's variable. It didn't here. So you got to combine it with charts, no doubt about it. I mean, if you bought it on the dividend here when it had this chart, yeah, that's crazy. So, yeah, thanks for pointing that out. What is the Yield Max Fund? Is that a shipping fund? No, but no, I totally understand in this type of market, messing around with that kind of stuff as a, let's say you're bearish on the overall market. It doesn't hurt to roll it into things that are more conservative, no doubt. All right, so here's another thing, real quick. You just saw the ES up 6. What happened as you're watching it? Well, you're watching the things that made it go up start to roll over. So that doesn't mean you have to short, but you sure as heck don't want to buy. So I would watch all of these. I would watch to see the participation. So if you see the things that made it go up, like Costco, start to go down, yeah, then you're probably going to go back to unchanged. If you see Russell, which markets go up earlier, if that starts doing this, going down to here, then it's more likely this is going to test that low. So hope that makes sense for you. Great question about Visa, DJ. Yeah, we made money sometimes in it, but let me show you why we shorted Capital One and not Visa. Learn my lesson. So what are we talking about? It's a great question about Visa because on the one hand, you're like, hell yeah, it's overdone. It's this far over all the moving averages. Why American Express is this far under them. On the other hand, go back 50 days. This is lower than 50 days ago in a downtrend. Capital One, sort of lower than 50 days ago. That's why it's in a downtrend. Visa, much higher than 50 days ago. So the moving average is going straight up. So if I'm going to play a credit card company, you got to play the ones already in a downtrend. It's a great question, but I think you play the ones in the downtrend. Because if this sells off, the ones in a downtrend are going to sell off faster. That's a theory. That's why we're short Capital One. Believe it or not, we're now nervous we're going to be too right. We were actually rooting for Visa to go up. But here's a perfect example. Overbought in a downtrend. Visa, overbought in an uptrend. Which one went down? Which one went up? So I would stay with the things that are overbought use the 50 moving average and just extrapolate that this is higher than 50 days prior. So the moving average is going up. So that's how I do it. So thanks for the great questions. Have a great weekend. I know it's only Thursday, but I'll be revisiting you next Monday. Take care and talk to you later.